Hello, everybody. It's Bob Anderson, and today is June 4th. See, I have my June calendar up. See, that's that's Lucy, by the way. Lucy's a ham. If you can't tell by the facial expression, she's a ham. Anyways, I did some trading today, and then I called it quits. I had a successful day. Part of discipline in trading is to recognize when to just say, okay, we had a good day. I'm going to be excited at the end of the day as long as I make this much money or whatever, and so I'm going to walk away instead of continuing to trade and probably give it back. Um, just to kind of interject on here what I mean by that. I mean it in a lot of different ways for those of you that have ever traded. But it's summertime, right? For all intents and purposes, it's summertime. For trading, so I anticipate things to be kind of slow. News today was just kind of light, and therefore, I think that we have some opportunities, early, and then as the day goes on, you got to be really selective, and you may not even have follow through. And so to go along with that follow through, and what am I talking about with walking away because I made a couple trades? My trading strategy that I use, I go into it with the mindset that half the trades are going to work and half the trades are going to fail. I mean, that's my mindset. My mindset going into it is that I'm gonna fail 50% of the time. And I will tell you something interesting. It seems like to me um, that more times than not, my first trade is a loss. So if I come out of the gate and go bing, 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 I'm done because now the odds are going against me. Uh, so because I look at a 50% win rate, you got to understand. I also intend when I go into a trade to risk 10 ticks, say in gold or oil, and NQ is totally different, but 10 RTY is the same. 10 ticks. I try to go into a trade risking 10 ticks. If there's a pivot just below that 10 ticks, I'll put it there and then kind of evaluate what's going on. And then, as I talked about before, I'm like General Patton in World War II. I'm moving forward with those stops because I'm trying to keep myself into winning trades and out of losing trades as fast as possible. And I'm going to show you two trades today that identify exactly what I'm talking about. That how to recognize when you're in a trade and that it's going to be a winner or it should be a winner, and that is that immediate zap in your direction. And there's just certain triggers in my strategy that help identify if this is possibly going to be one of those. Okay. And so, anyway, I'm going to go over these trades in gold. I might glance at the gold chart for the rest of the day, but I'm doing this video at like 11 o'clock because I'm done. I'm going to do the video and get it out, and not trade, not trade, not trade. Let's not give it back. Okay. Oh, the other thing is on that strategy. If I'm risking 10 ticks, I'm looking for at least 20. And in the summertime, boy, that 20 can be everything you got in that trade. It could be 20 and then a matter of fact, my first winning trade, my first decent sized winning trade today, you'll see I got lucky. I got lucky, and I got 20 ticks out of it. I'll go over that. I'll go over how I got lucky too. Anyways, because it could have been just a break even trade. So let's get to the chart, and then we'll go from there. Okay, this is gold chart. I'm going to try this video for about the third time. It keeps getting corrupted when I try to edit it. But anyways, so here we are. This is gold today. Let's look at gold. I want to talk about this in detail because our goal today is to identify these big red candles, big red candles, big green candles. We want to identify those because those are the ones that are going to make us money if we know when to get into them. So anyways, this is gold. Gold opens up at 8:20 in the morning. So I like to leave it alone, let it maturate a little bit, do some movement, do some smooth stuff, and then all of a sudden, so what am I looking for? I'm looking for a Donchian Channel piercing. I'm looking for it in the case of this. I'm looking for a long because we're north of the 5-minute red line. Let's talk about what I see here. Here's what I see. I see the overnight open way up here. I see the daily high here. I see the daily low here. So we do have a down day. Okay. But after the market opens, it starts running up. It crossed over the red line and it starts running up. So this. I can only play with what I got. So this is it. So we get a new Donchian Channel high right here about 9:01 in the morning. Then this is Eastern Standard Time, and we get a lower high, another lower high, another lower high, and then boom, there would be your long. But in my case, that isn't what happened. And if I had done that, I would have gotten out at break even because this would have ran up 10 ticks and then came back down and boom. Now remember, I'm looking for risk to reward. So I'm looking for 10 to 1. I mean, not 10 to 1, 2 to 1, 3 to 1 type trades. 2 to 1, 3 to 1. Summertime, I'm going to be focusing a lot more on 2 to 1 than 3 to 1. So today's focus was 2 to 1s. 2 to 1 being, say, 20 ticks with 10 tick stop. But even with my stop, from the moment I'm in a trade, I'm looking for a reason to move my stop tighter so that it's not a full 2 to 1. But anyways, so what did I do? Well, I was going to take this trade, this pierced down, and then I took a long right here when it came back off the gold line. And then I had another trade that I was going to take the break because I was really looking for a one and done. Okay. What happened? It ran up 10 ticks, never pierced this candle here. So my second orders here, this thing ran back, knocked me out at break even. Well, hell, that killed the trade. Then we roll down and we're below the gold line. Now I'm getting even more excited because when we go from here to here, or here, new Donchian highs, we are definitely doing something. So we went from here across the gold line. This is our 1 EMA, our 9 EMA, 1 minute gold line. Boom, created a new Donchian high, stayed at the Donchian high, rolled down a new lower high. Boy, I am struggling. All right, so what did I do here? I did the same thing. This thing pierced through. I bought it right off of it as it rolled back up. I bought it right here off the gold line. And then I had my second entry right here. One tick above this, bam. Now, here's a big green candle. How did we get that big green candle? We got that big green candle because we crossed over that gold line. We created a new Donchian high. You may sit there and go, but Bob, that's only one tick. That's what we're looking for. Remember, that when they stick this through here, they're catching the amateurs that are chasing the trades, and then they're running it back to a pivot point and then rotating it up. Boom, boom, bam. There's your trade. I was out. That turned out to be a very profitable trade, as you can imagine. Then we created a new daily high. Then we had a lower high. Then this one broke at the top of this one, and we never touched the gold line. That discontinues any trade. But more importantly, I want to point this out. With gold, one of the things I avoid being in gold trades as much as I can If I'm already in one and it's working in my favor, that's one thing. But other than that, I don't look to get into a new gold trade when the equity market's open. Here it is, 9:30. See this? That's the 9:30 candle. That's when the equity market's open. Look at this. It just crashed straight after it. And that's the kind of stuff you'll see in gold. Gold is thinly traded, but when the equity market's open, it will act kind of sporadic. Now we're back into the 5-minute red line, but it's not even 10 o'clock yet, and we've rolled right through it. So let's look at this in reverse. Think about this in reverse. This went from here, across, down, up. Okay? So from here, across, and we're still going across. Now we're below the red line, so we're looking for shorts. Donchian Channel low, higher low, higher low, higher low. So each one of these candles, after it closes, you're moving your sell stop right here. You're moving your sell stop. Once it pierces the gold line, you're moving your sell stop after the candle closes underneath the candle, So what happens here? Bam! Big red candle. I took that trade. Bam, bam, 20 ticks. 2 contracts, $400. That was a beauty. Absolute beauty. So I had a break even, a big win, and another big win. And I'm done. It's not even 10 o'clock. Now, why do I have this circle here? Well, one of the things I was pointing out as I was trying to do this video several times is that this creation of this big gap in space is important. This one is not as big. This one is. And it's a lovely thing to see because that's them thrusting price action back against the trend. This is the trend. This is the thrust back. This is when they're cleaning out the stops and getting out the shaky traders before they roll it over. Where's this thing going to go? It's going to go back to here most likely. And it did right there. It went back to the Donchian low. Okay, now we got a new Donchian low. One tick through it. Let's see what happens. Okay, we got a lower high. A higher low, and then a higher low. And bam, there's your red candle. Woo, look at that one. Now, I didn't take this one, full disclosure. I took these 2 and I was done. Okay, why get my money back? My goal is to get 50% correct. If I can do better than that, great. And when you're doing 2 to 1 on your trades or more, because I'm always moving my stop. For example, when this one went in and this candle slammed down, I had my stop underneath this thing. And as soon as that big red candle started, I had my stop above the top of this candle because if it reverses from there, it's going to slingshot. You understand what I'm saying? There's no sense in watching it slingshot. But it went down, boom, there I am. So here we go again. New Donchian low, a new lower, higher low, a new higher low. Oh, and then it's 10 o'clock, the news. I forgot, that's right, 10 o'clock. So 10 o'clock news. So we had news at 10. Gold is highly influenced by news, boy. Oof. It can get brutal. So let's talk about this. This is one of the things I want to talk about, just quickly. So what we did is we crossed over the 5-minute red line before 10 o'clock. Okay, before 10 o'clock. Now it's after 10 o'clock, and we're looking for potentially that red line to be the direction guider. Okay, so what does that mean? Well, what that means is I'm looking for, if I was still trading, which I'm not, and this is news, so I'm not also, but I'm looking for price to go back to this red line in a relatively smooth pullback, straight pullback, and then rotate back in the same direction. Well, here we go. We had an inside bar. We had this touch went through by 2 ticks. You had an inside bar. What's an inside bar? It's the top and the bottom of the candle or inside the candle to the left. That is a huge sign that you're going to break, because this is a consolidation candle right here that you're going to break down. Watch this. Boom, boom. And it should go all the way back down to here. And that's exactly what it did. That trade right there is $800 per contract. Right there, 800 bucks. 800 bucks. So let's try to identify a differentiation between that trade and a non-valid red line trade. Okay, let's keep on going. We're doing Donchian Channel lows, Donchian Channel low. Now, mind you, we were north of this gold line and we crossed it. This was a pullback here, but the problem is we didn't have a new Donchian low. Granted, the trade worked, but it didn't have a Donchian low. I wouldn't have taken it. Here we go. Ooh, here we got a higher low. Donchian low, higher low, back into the gold line. Candle closes, order right here. Let's keep looking. Okay, well, okay, now we go up higher. Low closes, candle closes, order goes here. Candle closes, higher low, order goes here. Did anybody see a big red candle? How do you identify big red candles? How do you identify big green candles? You look for those Donchians. You look for that exact smooth pullback straight into that 9 EMA, and you wait for the break of that candle back in the direction of the trade. What does back in the direction of the trade mean? Back in the direction of the trade means in the direction of whatever this red line is telling you. If you're south of it, you're looking for shorts. If you're north of this line, you're looking for longs. Okay? This market was down quite a bit this morning before we even got, into 10 o'clock. So most likely it was going to be going down anyways. That's just the bias. And that's exactly what it did. And by the way, for you swing traders, after 10 o'clock, look at that. All right, now let's talk about 5-minute red lines for a second. Okay. Now we have a new Donchian low. We rolled up through. Was there no trade taken there? Because none of these candles got broken. See? And then once this one opened and closed north of that red line, we're done. That's it. There's no shorts. Then this broke the pivot here. So now we got a problem, because this was the pivot that rotated down to here. This was the pivot that broke it. I always tell people, if you can look to the left, it'll tell you what the future is going to hold. So much in trading, so much in price action. So what happened? This came down, never hit the lows, and rotated up. Look at that. So we're stuck, okay? We're stuck here because we're not creating new lows to be looking for 1-minute gold lines. And then once we get past 11 o'clock, which is right here, forget it. I'm not looking for any 1-minute gold lines anyways, okay? Now, I drew this zigzag here because what I wanted to show was if price had gone from this Donchian low, granted it's a daily low too, but if it had gone from this Donchian low, even though it broke this pivot, if it had rotated in a smooth manner, such as this, to this line right here, I'd have been all in for another short. But because remember, this is a 5-minute moving average up here. So the people trading it, even though it's on our 1-minute chart, the people trading it are trading with 5-minute candles. So their idea of a smooth pullback is a consolidation of 5 of these candles, a consolidation of 5 of these candles, a consolidation of 5 of these candles, a consolidation of 5 of these candles. So they're not seeing this kind of garbage in here at all. Okay. But if you're doing this stuff, which is this right here, then their candles are even going to be screwed up, because they had 5 that went green, and then 5 that went red, and then 5 that went green, and then 5. I mean, it's not doing what you need. You need pullbacks with authority. You don't need meandering. So what happens is when we get over here, so you're not seeing anything. I'm not seeing any trades. As a matter of fact, because of what's going on here, I'm done with gold. Okay, I'm done with gold because I'm done. It's after 11 o'clock. So I'm not going to get any more 1 minute trades. And the 5 minute trade is all screwed up because of this. So what happens? We get there, we sit there. I don't take that short because of how we got there. Bam, gone. Okay, so what I was trying to get across in this video is how to recognize with the right instrument, whatever instrument you may be trading, the pattern of when you can anticipate a big green candle or a big red candle, depending on the direction of your trade, so that the moment you break the candle to your left and you take that trade, from the moment you hit it to the moment you get to your target, it's green the whole way. Now, nothing's more exciting. If you go back and you look at those, for example, now, granted, I got a little bit of lucky on the first big trade I got. Even the first one that I got break even on, from the moment I was in to the moment I got out, it ran up more than 10 ticks, came back, boom, knocked me out at break even. Okay, no harm, no foul. I mean, you know what I mean? But I wasn't sitting there stressing. The two that I did get profits on, and then the ones I showed you after that I didn't even take, from the points that I told you where the entries were to the point that you got to your target, you were in profit on all those trades from the moment you entered. I mean, and nothing is more exciting than getting in a trade and you don't even have time to grab your target because it hit your target. That's what happened to me on the first big one I got today. I didn't even have a chance to grab my target. I mean, I was grabbing my stop and getting it in the right spot, going up to grab my target, and wham, we're done. Okay, well, shit. All right. So, anyways, when you do things like that, you know you are in sync with the market. And also, it makes it easy for you to be patient and wait for Donchian this. I have the Donchian. I used to do it. I used to eyeball it. I always eyeballed it. Look to the left, see for 60 minutes. Do I see anything? No. Boom, boom, boom. Donchian makes it easier to see everything for you. But anyways, in the description below, I have all the setups of how the charts are set up, and and I want you to see how you could potentially see those nice, smooth 20, 30 tick trades just like that, instead of struggling and trying to identify where to get in, when to not get in, all that kind of stuff. Anyways, that's the point of this video. I hope everybody got something out of it. I mean, when I started hitting these type of trades, it changed my trading. I can tell you that. Now it's all between here. Okay, for me, it's all between here. And one of the things I'm so proud of myself today between here is that when I hit this one and I hit this one, and I was fully focused and they did exactly what I wanted, I shut it down and I kept my money and I didn't trade. You know, I mean, because the old Bob would have kept on trading and gave all the money back. Everybody have a good day. I'll talk to you later. Bye.